Look, this is not easy, but we're just going to build the best institutional quality suite of services and products that we can, and eventually the market will catch up with us. Which is pretty much what you did with Bitcoin to start with. You've always been kind of living in the future, and here you are, and we've kind of had the Cambrian explosion that you've actually been waiting for all of this time and preparing for. That's the argument against people like Coinbase scaling it. Everyone's got to scale it, of course, but because it needs to be a neutral counterparty, I guess, or a neutral infrastructure layer, that it can't just be built on Circle, it can't just be built on Coinbase.
Hey guys, welcome to Everyday Finance. Bitcoin might be about to go on another crazy run, and this time, it might last longer than anyone thinks. That's what Real Vision CEO Raoul Pal thinks. He thinks that strong macro trends will keep the current rise going well into 2026. During a recent talk with experienced macro investor Jordi Visser, both of them were optimistic about the future, though they had different time frames. Pal thinks that things will keep going up until next year, but Jordi thinks the real fun starts in late 2025. His brave call? A possible rise to $500,000. It's caused by a huge short squeeze caused by Bitcoin's set supply and rising demand. BTC's market value would be close to $10 trillion at that point, and it's likely that the rest of the crypto market would do the same. This could be the next big part of a much bigger cycle. It's not just another rise. Stay tuned for the full breakdown, and don't forget to like, follow, and ring the bell for more on the market.
Because Itbit was when I went to try and start the world's safest bank and gave up, and then you guys said, hey, look at Bitcoin. I bought it on Itbit because you guys had started an exchange. I'm like, how the fuck do I buy this? And you said, well, I've started an exchange, both in Singapore and New York, I think it was at the time. And so that was the start of my journey from that. And then you built Paxos out of Itbit, which wasn't obvious at the time because it was like you weren't getting massive volumes at Itbit. You were kind of one of the exchanges, but you had plans to build something really institutional. You always said that to me is like, we don't want to build just a regular exchange. We want to do something really important. So what was the vision behind Paxos?
Well, and by the way, that's certainly been a winding path. Maybe in hindsight, we should have done something that was more retail oriented. But the idea was we started actually, Itbit, and one of the co-founders of Teos worked for me for a long time. He's a Singaporean out of Singapore. And the reason we did that is because it was unclear how you could operate in the United States. And we actually figured out a way to operate. It took us about 2 or 3 years. We created a trust in the state of New York, the first trust in the whole United States to operate in crypto and blockchain. And we predated the BIT license, which New York is very famous for. So we even predated that mechanism. And that's when we were able to come into the U.S., and that's when I came in as the CEO. And really, while we started as an exchange, the whole concept of getting a trust was because we wanted to be infrastructure that people could build off of. It's been the same all the way back since we started Itbit, was how can you enable blockchain infrastructure to change the financial system? How can you take and re-platform the world's financial system? You have now nearly $900 trillion of assets. How can you get those to move in real time, in a programmable way, in a way that will fit with where the economy is going to be in the next 3 to 5 years? You can't do it on COBOL mainframes, which is still largely how those assets sit. Most people don't even know what that is. But they still exist, and that's actually where the vast majority of assets in the world are moving and sitting on, and that's part of the problem. And that's what we wanted to solve was how can you remove systemic risk? How can you create a more open financial system? How can you create a real-time internet-based financial system? And doing that would be very valuable business. And I still think that's the case. And so that's the reason we started the company.
Every time I've caught up with you over that kind of you have to wander in the desert when you've got no regulatory clarity, you've been pretty clear. It's like, look, this is not easy, but we're just going to build the best institutional quality suite of services and products that we can, and eventually the market will catch up with us, which is pretty much what you did with Bitcoin to start with. You've always been kind of living in the future, and here you are, and we've kind of had the Cambrian explosion that you've actually been waiting for all of this time and preparing for. So what are the kinds of things that you're focused on now? What is the big opportunity that's in your present? We'll talk about the future in a bit.
Yeah, I think one of the things about Paxos is that we have been able to bring large institutions into the crypto space. Examples are PayPal and Mercado Libre or Venmo or Interactive Brokers or Nubank. All these firms initially launched or to this day continue to use Paxos as their infrastructure to be able to enable either crypto access for their customers.
In what way do they use the infrastructure? What are you doing for them?
Yeah, it's probably worthwhile to maybe just step back and describe what does Paxos do at this point. And so we really have two aspects to the business. One is around our infrastructure, and then the other is around tokenization. And on the infrastructure side, we are providing custody wallets so that firms could launch, buy crypto, sell crypto, send and receive crypto, hold crypto to their customers. You went on your PayPal app and you were buying or selling crypto, it's Paxos in the background, or Venmo, or whatever it might be. Interactive Brokers. And we also provide stablecoin infrastructure, like for Stripe and MasterCard and others, where a merchant needs to accept a stablecoin. And we're the wallet infrastructure that accepts the stablecoin and can turn it into cash for that merchant. Or there's examples where we might have somebody's cash account, access to the cash account, and can then send out a stablecoin. So you can then send and receive stablecoins using our infrastructure. And then that's the infrastructure side of the business, the solutions that we're providing. And then on the other side, we're doing tokenization. And believe it or not, we tokenized U.S. equities all the way back 5 years ago. We had a no action letter from the SEC that allowed us to do it. And it was for Bank of America and Credit Suisse and SocGen and Instinet. And of course, then Gary Gensler came in and our no action letter expired. And, we had an agreement that he would allow us to, be able to launch this more broadly. And, he just really, kind of backtracked on everything. And in fact, became worse than even backtracking. Became, kind of, yes, hostile and punitive and, really operating illegally, in my opinion. And that was a shame for the U.S., not just for Paxos. But on the tokenization side, not just equities, we have the largest gold token. It's approaching $1 billion of tokenized gold. We've had it for, 6 years now. And we, of course, tokenize dollars through stablecoins. And that's what most people know us for. And we generally don't do our own stablecoins. We do it for other people. So PayPal stablecoin, it's a white label stablecoin. It has our name on it. We provide all the underlying infrastructure. It's kind of an out-of-the-box service. We also have done it for a group of companies. And it's called USDG, the global dollar. And that's Robinhood and Kraken and Anchorage. MasterCard just joined yesterday. Fiserv, also talked about how they're going to be using this. There's a number of very crypto native companies that use it too. It's probably 25 or 30 firms that are using it. It's a kind of a consortium dollar where everyone shares in the economics. It's an open, system, and we're just the issuer. And we also issue actually a yield-bearing stablecoin, which we do out of Abu Dhabi. We're regulated today in New York with a trust and the equivalent of that in Singapore and Abu Dhabi. And so that's what our business does today. And so we've been doing this and building it and working with a lot of great companies that I all mentioned here. And it's not just all large institutions that use us. We have smaller companies too. And, we're trying to make sure that we're making this available for everybody. I just think that you need kind of neutral infrastructure in order to make this become widely utilized. And that's pretty common in the financial industry. If you kind of look at where neutral infrastructure sits, it's been exchanges, it's been clearing corps, it's been payment networks that everyone can come and use, because even a company with the largest market share like JP Morgan on a global basis still has a very small, less than 1% market share of, financial services. And so it's a very fragmented industry. Everybody already has the end user. Everyone needs shared infrastructure.
That's the argument against people like Coinbase scaling it. Everyone's got to scale it, of course, but because it needs to be a neutral counterparty, I guess, or a neutral infrastructure layer, that it can't just be built on Circle, it can't just be built on Coinbase.
Raoul Pal says, "We're in a new era of capital creation, and crypto is at the front of the pack. It's not just about returns for a new group of investors, it's also about access, control, and the chance to be a part of markets with real asymmetric upside." Jordi Visser backs up that story with facts. The amount of money Americans spend on gambling has now topped $200 billion a year. While big purchases like new cars keep going down, it's clear what the message is: capital is moving toward assets. With great potential and 24/7 liquidity, crypto is setting itself up to be the foundation of the next economic cycle, as AI technology grows and energy needs rise. Even though the cost of capital is going down, people need tools that can quickly move money, store data, and handle transactions. Pal doesn't think this is just another market rise. He said that this might be the start of something much bigger.
Another thing that I've talked about for a long time, in fact, when I first ever wrote about, first wrote about blockchain, it was the idea that, like OTC options, that whole market, because that's just a smart contract with collateral attached, and it's a big, a ton of it had to go to the exchanges in the end because it's such a big fucking mess. I just don't see why all of that doesn't get tokenized, because we've essentially doing it with perps and instant settlement and everything on DeFi exchanges. And again, that's another quadrillion-dollar market.
I think that's exactly right. I mean, when you talk about these like kind of complex structured derivatives and structured products, they're just smart contracts. It's just that they're not on chain. So you need some centralized intermediary to say, like, here's what's going on, because you have one person and you have another person, and what's the source of truth? Well, by the way, that's the whole point of the blockchain. Now, it hasn't gotten to the point where it could provide enough utility compared to an exchange, because everyone's already plugged into it, and there's a lot of capital tied up there and other things. But as you solve other problems on chain and you build up scale, it's inevitable that everything will migrate on chain. It's just a timing sense.
I just feel like we just break apart all of these parts, and at the issue is at the center of the financial system, nobody knows who owns what, and there's a ton of capital tied up. And as you start peeling back all of the layers, you start freeing up capital, and ownership becomes a real thing as opposed to a false thing.
That's right. Yeah, because you just have all these layers of intermediaries, and in order to make things move, you had to create joint ownership. Just like everything at the DTC is held in this company called CD&Co, which most people definitely don't know DTCC, and they probably don't know CD&Co. But basically, everything is held in like what is called street name, and so like you can't have anybody fail because you have mutualized ownership of everything. You don't own any of the underlying stock in your account. You have to pull it into your account, and it's very complex.
Do you remember when I went down this rabbit hole and I found out that, just speaking to the New York Fed and the DTCC and Euroclear and the ECB, that at the center of the clearing system, there is no client segregation.
That's right.
If anything goes wrong, the Fed lends them money and takes collateral, which is anything, and you don't own anything. Nobody owns anything. As you said, it's all mutualized.
I think we got to like the logical conclusion of scale. And like everything, all of history is essentially about bundling and unbundling empires and, technologies. You kind of bundle because you're getting returns to scale, and then you get so big and it becomes like so fragile, and something disruptive comes along that you then have to unbundle everything, and then you rebundle again. And I think that's why everyone is like pushing decentralization in so many aspects of society, because we hit the end of centralization, creating returns to scale, and now it's creating like actually negative returns to scale, most likely. And you need to break things apart. You have new technology that comes along. That's disruptive, and nobody necessarily likes it, but we're getting used to more and more disruption. But it still has never come for the financial system. It came for a lot of other industries, for telecom and media, whatever. It's coming for the financial system. It was held back by regulation, but even kind of the most aggressive and difficult environment of the Biden administration still didn't stop this from moving forward, because it has so much truth to it. You know what I mean? Like, that is a sign of like how strong the truth is, that even trying to fight it was still fighting the tides of time and the tides of change. And so decentralization is going to be such an enormous unbundler of value, whether it's capital that we've talked about, ways in which people are going to be able to get access to products, some really big changes.
Are you seeing, when you're speaking to clients and new clients, them thinking about what chain their stablecoin exists on?
Definitely.
And is it, my working hypothesis, and you'll know better than I will, is that EVM seems to be the most obvious because it's got the largest, broadest ecosystem. And I've been saying this, people like Ethereum's dead. I'm like, I don't think so. I think the financial system, no bank I've ever been into ever has had an Apple computer. The whole fucking lot is Microsoft operating systems. It's like They
Windows
just agree on one
95.
thing and they do it.
Yeah. Well, it's such an interesting way of approaching it. On the one hand, like no one should really care about like the underlying chain because it's just like what can you do and what speed can you do it in and what's the cost, and what is the privacy and what is the anonymity. And so I actually think we're very far away from like being at the final word of chains. Of course, there are network effects, so this could not shift.
Yeah, and we shouldn't, and we won't even know what chain is. Like, I don't know what Wi-Fi you're on. I don't know anything. What computer you're on. It makes no difference. We should never know.
The way crypto day traders work is quickly changing because of AI. Tools like Grok and ChatGPT are needed to deal with markets that are open 24 hours a day, 7 days a week, and are affected by hype, volatility, and emotion. Traders can use these tools to spot changes in how people feel in real time and use those changes to set up structured trades. In the case of Solana, its DeFi rise in June 2025 caused TVL to go over $9 billion. Traders who used Grok could have seen the early rise in negative mood on social media. ChatGPT helped them plan exact entries, exits, and stop losses. That's the new edge. Structure driven by AI and real-time data. In contrast to traditional markets, crypto markets need speed and flexibility because they have very few orders and are always changing. Grok searches X for tiny references and changes in how people feel. Then, ChatGPT helps turn that information into trade plans that can be carried out. With goals based on risk-reward and entries above breakouts, AI is becoming more than just a tool for short-term traders who are looking for chances that move quickly. Is this good for the market as a whole, though? Post your thoughts below.